Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, traders. It is Wednesday and we got to start a little early here. I think I want to be, well, maybe not. Okay. So ADP came out, was really bad. Negative 301 versus an expected 184. So, there's been a lot of talk we've seen both from the administration and from the Federal Reserve warning us that the Friday's jobs number could be really bad. And now we're getting this ADP number, seems to really agree with that. And so I think that we could see interest rates drop here a little bit today is kind of my bias coming in here. But come over to the charts, man. We got all sorts of crazy stuff happening in this market. Where is my volume profile? All right. So when we look at the ES, so it was mostly range bound yesterday. When I made my note, it was like, they didn't really go anywhere. But then after the market close, Google, well, 1400 is the market close, right? So there was like a panic bid late in the day, and I think that they were trying to front run Google earnings, which were good. Google is up 10% overnight. Can you believe that? It is just always insane to me when you see a big a stock as big as Google make a move like 10% or more. Just crazy stuff. So we see the S&P 500 is up this morning. Treasuries had a little bit of a drop yesterday off of like some Fed comments, and also because the PMIs were a little hawkish. The prices were rising, but there was some signs of a slowing economy, and I'm seeing a lot of things right now that suggest a slowdown. I think that we are going to see a pretty measurable impact slowdown from Omicron. So got that coming in here. Oil is taking off. I don't know what the news in oil is yet, but something happened. It's probably OPEC. Is OPEC already over? I don't see. OPEC Plus agrees to increase March oil production at 400 barrels per day, which was expected. I think I'm surprised that they're moving up. Trading floor audio. Looks like there's a whale snapping up cold bullion below 1800, says Bloomberg. Metal went from $150 discount to a $20 premium to fundamentals. Scale of purchases point strongly towards a sovereign buyer. Interesting. So let's come over here. Natural gas is just going up, although the analysts are kind of saying that that's going to come back. So I don't know, but natural gas, another strong move up here. Silver and gold is kind of, somebody did snatch it up below 1800, so that's kind of interesting. And copper taking off. What about the Bitcoin? So the Bitcoin did have they're back above 3800, but kind of going sideways. I don't know. If there's another dump in the stock market, and of course today it doesn't look like there's too much to be worried about in that particular area. But if this rally in equities were to falter, I think you have a really good chance of Bitcoin pushing down to a new low. And they're just in a precarious position. I was seeing some analysts starting to talk about the next halving, so we should do a little bit of research on that today. And the dollar continues to fall back towards 95.5, which is kind of where it was before, and I think would be appropriate. So. All right, so that's where we're at. There was a bit of selling there in the treasury, but 128 below 128, but it looks like for now they may be stabilizing. Man, I tell you what, I have been having like allergy like crazy. Like I think that it's something that's always been in the air, but like my body is just starting to like really react to it. And it's not, I mean, it's winter, so I don't think it can be any kind of pollen or anything like that. But I am just like sneezing like crazy last night and my eyes keep watering and I just feel like crap. I I think I need to see an allergy specialist. All right, what's Nassim Nicholas Taleb saying here? For those new to the game, there is zero evidence that resistance, trendline, Fibonacci, shooting star, and similar concepts predict anything in markets. It is simply like astrology or modern portfolio theory, an anxiety reduction scheme. And then he links a Bloomberg article. Bitcoin's trendline from peak keeps pressure on token. Yeah. Yeah. We're just going to retweet. We're just going to retweet this. Retweet. Just because, if people don't believe me, maybe they'll believe Taleb. Tesla has moves. Tesla is different. Tesla doesn't count, okay? Tesla does have moves like that all the time. Yeah, you're right. But like when a Google or an Apple has a move like that, those are monster moves, man. It doesn't get bigger than that. New York looks like a major European country in terms of vaccination level. It's red, America dragging the average down, probably. As I'm watching these vaccination rate numbers, it's really interesting to me how, like, the difference between like 75% vaccination rate and 95 vaccination rate is apparently matters. So it's like when the statistics come out, the difference between the two is like a lot of lives. Okay, we are seeing price in the treasury being pressured, which does concern me, but the volume in net is not all that significant. In fact, it kind of just looks like that this is market makers are just kind of allowing these prices to be a little bit weak right now. Oh, we do get some news here. What is the news that we get? Canadian building permits, nothing too big. Bank of Canada's Gravel speaks at 10 o'clock Eastern time. Other than that, we don't really have a whole lot of news. So today could be an interesting. Okay. Oh, I forgot we have the refunding announcement. Is that okay? That is the announcement, though. Well, I'm already off. That was a mistake, even though it doesn't look like we're being punished for it. That was a little bit of a mistake I made there. But there's the refunding announcement. Did I have that on any of my I was mentioned in the news squawk briefing, but it was not on any of my calendars. Hmm. Tesla is a larger market cap than Facebook. Oh. But does it really deserve to be? Does it really deserve to be? It's kind of funny when this all started because remember, it wasn't Facebook. Facebook now does Wednesday or Thursday, tomorrow. Tomorrow is Facebook earnings. No, it was Netflix. Netflix was the one that took it on the nose. Oh my gosh. It's kind of looking like Facebook is going to be the only, or sorry, Netflix is going to be the only FANG stock that did poorly earnings season. Because both Apple and Google have done really well. We'll see. We'll see about Facebook. Facebook might be kind of nasty. There's Facebook, and what's the other one? Oh, Amazon. Amazon is today. But all of the really big, old, reliable ones have been doing well. So I would think that Amazon could do well too. Okay, so still very light volume moving them around, but it is the opposite of what I was looking for, and I've just been off, 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 off. Yeah. Well, if that's the way we're gonna go, watch them stop here now. So there was again there was that refunding announcement. The U.S. Treasury. I don't know what that was compared to like expectations and stuff, but since the market is being weighed by it, I don't really see any other news on the calendar here. Hmm. I'm seeing the 6J looking awfully heavy. Pretty good offer there at 32. Sorry, a good offer at 30 as well. Yeah. Looks like maybe a little bit of a hole here. Was that there when I was thinking about puking? I don't think that there was as much volume at 29.5. I'm surprised that they've traded almost 8,000 contracts there already. Hmm. What's my problem here? It may just be off tempo again. I'm just like, why am I so off tempo? Apparently, we're getting snow today in Utah. That might be nice, actually. Uh-huh. Let's see, there's a lot of people saying like that the jobs report will be weak, but that we should ignore it because the employment looks strong and the economy still looks strong. I don't know. Interesting. Well, they don't seem to care too much about me. I do see some evidence of steepening. Hello, good uh big toasty. Why did I say good? That's man. There must just be something wrong with me, man. I'm like my mind is not working well. I don't know. My allergies affecting my judgment. Hmm. So in the treasuries, first move as of late, it's kind of been just like they picked a direction and they went there. Today, it seems a little bit more indecisive there, right? They were meandering up that kind of looked like was another trend was starting another way, right? Like I jumped the gun there big time. I think it's just starting to mess with my head a little bit. Well, there was a decent amount of contracts smashed into the wall. There's some leaning at 29. Okay, but they cleared it. Not a strong offer, but they did clear it. See, I'm not really seeing anything too interesting going on in the other instruments. Does look like they're gonna push to new lows. I suppose if they break through here, um, this like 27 half area, then we could start attacking yesterday's lows, and then there could actually be like some more significant downside. Okay, so New Squawk says the Treasury quarter one refunding auction cuts in line with expected. Ahead of expected Fed BS reduction, TD Bank shows a preference for smaller cuts at the May refunding, primarily in the long end, and no more cuts after that, as Treasury will need more financing via the private sector. I don't know what TBAC is. That's I've never heard that acronym before. Treasury Borrowing Advisory Committee. That's their recommendations, huh? Interesting. I'll put one to hold the line there because there was somebody offering. All right. Think we'll get a breakout here? That's the advisory committee that sets borrowing targets. Yeah, I'm curious why I've never heard that acronym before. I'm trying to think through. News Squawk gave us more detail there on their refunding announcement than we normally get. So hmm, a little bit of absorption on both sides of that there in the 10-year, but the 30-year seems to be pushing down very aggressively. There you go. There's another break. Equity market's not really reacting to this yet, but I'm wondering if this turns into a real storm. Washington's NFL team finally has a new name after 2 seasons of playing without one. They are the Commanders. Okay. Sounds like an okay name. Did they get a cool logo? Let's see if they get a cool logo. Yeah, this is on some big absorption there at 27. Oh, I don't. Their logo is kind of like okay. Meh. I don't think that that's the best branding, to be honest with you. To be honest with you, I don't know if that's the best branding. Zian might be figuring out the announced 37 billion auction for next week. I think it's I think a new on the run. Yeah. Well, so I think here when I'm thinking about things that might be affecting us, there was that jobs report. they spiked on that jobs report, but you notice that since then it's been turning back down. So for starters, I think that this move got a little bit of momentum because of the spike up on the jobs report, right? The book was just kind of empty below it. And you can see here on the DOM, when you look back up at it, a lot of these prices fell through on very little volume. Like, of course, that wasn't all the volume that traded there, but like at 28.5, they only traded 361 contracts, right? That might actually be a spot for them to come back to here. But it's falling on very, very low volume. And then we got the Treasury refunding announcement. Now, initially, it didn't really do anything. It fell, and then I kind of went back and forth there and made a couple of ill-advised trades. And then after that, they really fell through. But the thing that I find the most interesting about this move down is that it's been led by the 30-year coming down. So I think that is, like they were saying here in the where, let's see if I can say it again. Ahead T-back shows a preference for smaller cuts at the May, refunding primarily in the long end. So that sounds to me, smaller cuts. So I don't, maybe that's not responsible for the spreading. But the 30 years going, and we're steepening, right? So, and as opposed to on a lot of these moves, when the interest rate has increased, they flattened, right? So it's a little different, but that kind of suggests to me that there's it's pretty strong order flow behind this, and that Treasury announcement, even though they didn't react to it too strongly at the beginning, is turning into a lot of people having to adjust because of it. Now it's a 3K iceberg at 27. What do you think about Bitcoin this month, down or back to the all-time high? Well, I don't think that they're going to be going back to the all-time high anytime soon, but it seems like Bitcoin has been really heavily tied to a correlation with the S&P 500 right now. Of course, that correlation can always break, but I don't see any reason for it to do so right now. So I expect that they'll probably largely follow the S&P 500. Although if it will probably underperform. So like if the S&P 500 goes up to all-time highs, Bitcoin will probably follow it, but it probably won't go up as high. It probably won't go to like new all-time highs, right? You're probably we've probably seen the high for this cycle. Now, I should put a really big caveat on that, right? It's incredibly difficult to predict what Bitcoin price is going to do or see any kind of like sell event because of Tether. Like it looks like Tether is still doing manipulation and as heavily as it ever did. So, they're going to try and especially at these prices, like the lead manipulators like Michael Saylor have a lot of interest in it holding 30K. So, if you're looking for a spot for Bitcoin to bounce, this 30K area would be a really good one. You just got to realize that if it fails, that things could get really ugly really quickly in Bitcoin. But I personally do not see the macro environment being very favorable to Bitcoin. So I'm personally looking elsewhere. I've kind of ignored cryptocurrency through this whole thing just because it was all insanity, and I just don't want to be a part of it. But like when you look at fundamentals, again, interest rates are rising, and you are going to see more regulation come in. And if a lot of this activity is coming from stablecoins, that's a really big problem. So that's why I don't really see, with my choices, let me put it this way. Why do you want to be in Bitcoin rather than oil? Although oil is getting awfully high here too. Longer term, I think that before the end of the year, oil could get to $100. But right now, today, if they had another push up, they could see 90. That's a little too fast for me. I was kind of holding off on getting back into oil because of OPEC, and the things that I was reading. Of course, I don't understand supply and demand in oil very well, but that's why I was avoiding that event. But you can see they jumped up. They jumped up hard on that news. So, oil just seems like it's just going to keep going. All of these commodities have been looking good lately, right? So, why Bitcoin? Why not wait until after the halvening and see what regulation does, and then maybe try and catch Bitcoin? That's kind of my thinking. But short term for this month, I think probably a greater chance of it moving up in the short term. Mm-hmm. The mayor of Ottawa called tow truck companies, but all of the tow truck companies have COVID. Oh, man. At some point, we're going to have to talk about this blockade in Canada. Oh, I missed this comment from Ashk. The 30-year. By the way, where you seem to know quite a bit about these? Where did you learn these? 30-year could simply be starting to price in the upcoming 20-year contract that's set to start next month. Might be repricing the basket. Well, so I could see how that could affect could create orders in the treasury. But the question I would have with that theory is why now? Seems kind of weird that they would do it now, but maybe why now is because they did get the refunding announcement and they were just waiting for that. That might be the case. Well, so regardless of what happens from going forward now in the treasury, I do think that you could consider this a breakout on the daily time frame at least. You've still got some big support prices down below us, like yesterday's low 127.22 is like, has a big red X on it, I think. But it does look like that they have formed a distribution here around 26 half. Anyways, I've always found it extremely difficult to find quality information about bonds. It's like I know that there's like news and analysis out there somewhere, but I don't have access to it. Anyways, so in Canada, both in Ottawa and near Calgary, there's like truckers parked on the border and not letting any traffic through. And this is a big problem. Like this could cause meat shortages in the United States. You might want to go and buy like your hamburger meat and stuff. And so a lot of people on the left, like when I read it on Reddit, the people on the left are like really mad. They're like, why aren't you guys doing anything? Why aren't you arresting the people and things like that? Well, I think it kind of comes into like the same reason that they didn't do a lot for BLM is like if the police steps in and is heavy handed, then you actually kind of make things worse, right? Because then people start reacting to that and just escalates and it's bad news, right? But you do kind of have to clear the border, right? Like that can't just go on forever. That's going to have like a really significant economic impacts for people. But like, what are they going to do? So they can say, "Oh, we're going to tow them all. Like we're going to arrest all the people, and then we're going to tow the trucks." But the tow truck companies are refusing. They're all making excuses, saying they have COVID. So like, what is the Canadian government going to do? I don't know, man. If all the governments of the world unilaterally doing retarded stuff over the last 2 years hasn't starved us, I don't think a trucker protest is going to do it. Well, it's not going to starve us, but there is going to be a squeeze. It's Justin Trudeau cannot just stand by and wait for it to blow over. Essentially, I think my current going theory, I don't know a whole lot about Canadian politics or the Canadian economy, but my current working theory is that Trudeau's going to have to blink, you know? Okay, well they was a few contracts we're willing to hit at 25. So we still have some pretty decent you know, sell floats here, but I don't know if it's going to be enough for us to push to new lows right now. I don't know. And you know what was the other thing was that I think that Justin Trudeau can just hide in Biden's basement. It, you tell me. I wish we had more Canadians here. I would be interested to see what Bots has to say because it seems to me like Trudeau is scared. Like one of the things was this there's this huge trucker convoy and then there's the people on the border and he's like tweeting, "Oh, it's so reprehensible that there's these protesters out there hating on, and then they list all of the intersectional minority groups that they typically tend to talk about, like all in one tweet. Like it was really funny and it's like, this is a protest about vaccine mandates, dude." And I think that they're doing that because there was somebody filmed at the protest with a Nazi flag, but um, there was a video where there were some truckers tried to confront this individual with a flag and ran away. The guy ran away. So it seems, or at least I think that there's considerable reason to suspect that that was just an agent provocateur trying to undermine the protest. And they use that one agent provocateur to try and change the entire media narrative to, these truckers are all Nazis. It's a little, it's a little silly. And then he tweets that the guy with the Nazi flag was apparently accompanied by Trudeau's personal photographer. Are you for real? Well, I think we'd have to consider that room. I would have to hear the eyewitness account. I'd have to hear the eyewitness account. Here's what I think the response should be now. Like if they say, that these are Nazis protesting or whatever, I think the question should be who. Like who is the Nazi? Do you have the name? Can you give me the name of this Nazi? Can you prove to me who this person is? I think that we have to start doing that because otherwise, if it's like every time that there's a Nazi flag, then I guarantee you're going to see one every time because there's a really strong incentive for the politicos to do that, to disrupt things, right? So I think you have to say, who is it? And I think that you got to look into who these people are and look at their backgrounds, because they might just be people trying to undermine that movement. Let's see. We had some Nazis show up in Maryland legit 10 minutes from my house that they used it to slam DeSantis, and these guys weren't even from Florida. Yeah. Well, and that's the other thing that's really annoying is that, um, well, like you remember the Westboro Baptist Church, right? They were freaking everywhere. They used to be freaking everywhere. And the thing is that they would use um, the media attention that they got to both fundraise and to sue people in order to continue funding their operations. The Westboro Baptist Church did. In other words, the more attention that the media gives these people, the stronger they become. So every time, and the media has to know this. So it's like they just can't help themselves. I don't know. What do you think about Navinder Singh Sarara, the flash crash trader? Well, you've asked me that before, haven't you, Big Toasty? How to activate, set up, and use the free Sim Futures trading platform. What are you talking about there, Eshish? I would recommend the easiest way to get into um, trying to trade futures is to go and get a NinjaTrader 8 demo account. You just go to ninjatrader.com and there will be a little place for you to put your email like right front and center. I have no idea, probably. So my opinion on Navinder has changed a little bit over time. Nav, the man, the balls on that guy. He told the CFTC how some of the hedge funds spoof, and he is going to do it as well. Yeah, well, so I think that it was the banks that were spoofing at that time. Some people were spoofing for sure, for sure. How do you prove it that they were spoofing? You know, the people that got punished for it were they were able to punish them because they had like internal communications from them. Like they had text messages between each other basically talking about spoofing, and that's how they proved that it was spoofing, right? Otherwise, you kind of have plausible deniability to say, "Oh, I just didn't want the order anymore." You know, but I feel for the guy. This Navinder really, when I look at it now, I think Navinder was really the last true retail market maker. Is really what the deal was there. He was doing market making techniques at Futex. He was making good money doing it. He was very successful with it. I'm sure that it probably involved taking on a significant amount of risk to some extent and on having a lot of contracts on, but he knew how to take advantage of the book and so on and so forth, like many people did in the 2000s. But then the robots came along and he wasn't being profitable anymore when the robots came along. So he was seeing other people spoofing, so he decided to spoof too. And you know what? I kind of feel for him. Like on one hand, he knew it was wrong for sure. But on the other hand, given the environment, I think that a lot of people would say, "Oh, well, I'll just try and get away with it," right? It just so happens that he also ended up getting blamed for the flash crash, which really wasn't his fault, but I think it was kind of unfortunate, right? And the thing is it seems like he's never going to be allowed to trade again. Probably, right? That did that. I don't know if his sentence like banned him from trading, but I mean, it's not really. When you look at the larger scheme of things, yes, he knew what he was doing was wrong, but I don't think that it was really fair to him. You know, the flash crash was a 2 hour from Kansas City. I think that it was that there was a lot more at play than just like one person. There was a fat finger trade there, and then he was doing spoofing, and then all of the robots decided to just pull their liquidity. Like there's a lot of things, and trying to just blame it on one person is a little unfortunate because there needs to be some changes in the industry here, and they're just kind of avoiding doing it. He is banned until 2024. Oh, well, that's not that bad. I wish I knew how he traded. Well, I'm sure that a lot of it has to do with if they tick up, I put a limit order there to try and be at the front of the queue and so forth. And look at my, you know, my correlations and be interesting to see if there was some individual like technical signals that he thought were important, and we could maybe try and look at them and see if there really was an edge in them. I think that would probably be just like anybody else, though. Like that's the thing that's kind of funny is that sometimes the big traders don't even necessarily know where their edge comes from because these guys usually aren't like sophisticated quantitative researchers. You know what I mean? I don't think hardly any trader is. So there might be something really innocuous about what they're doing that's leading to their success and they would never even realize it. You know what I mean? But I think that it would probably be the case that if he were to make a course and you read his whole course, I don't think that you would read it and be like, oh, of course, this all, I don't think it would be like that. I think that you would think, oh, it's like that's actually fairly simple, and you would realize that a really big part of his edge was having a lot of contracts to be able to do the market making with. Yeah, a human is like an AI. Yeah, and probably the way that he traded was a lot like the way that the robots that he was competing with do it, right? Hence why he wasn't making money anymore because the robots were faster. I mean, the thing is it fair? I don't think that there's any way that you can say that it's fair, but then it's like it's not illegal or wrong either. Like it's not going to change, you know? Did Jim Simmons say that? Jim Simmons said himself something like that. If you don't have huge computing power and resources, high quant expertise is probably an impediment. Yeah. Well, the thing is that if you have I wouldn't say that I have high quant expertise, but I do think that we have learned a lot more about market microstructure than your average retail trader, and it is kind of like that. It is kind of like I don't know, I wouldn't say that it necessarily is an impediment, like it causes me to do things that are wrong and make me do a poor strategy, but what it does do is it makes you realize that you're probably wasting your time, right? So, how are you going to have the wherewithal to keep with it and take on the risk necessary to be successful if you know all of those things, right? It's more likely than anything else to just discourage you. And I think that in to some extent it does that to me. But I'm still glad that I know these things because then I know, okay, but here is where the best opportunities for me are. Not just the where the best opportunities are, but like the most likely ones to work out. And uh, uh, uh. So it's started to get pretty quiet here in the treasury. Here, just kind of chilling down at the lows. I don't know if that means that they'll try and make another move when the S&P 500 opens up, but so far this morning, since we've been in, the S&P 500 has kind of been slightly down. Mm, mm, mm. But I would like to hear more from him. I would like to talk to him and hear what he was doing. I think it would be really interesting. I don't think that it would be like some great revelation, but it would certainly be interesting, right? But I do think that it was a little, the way that he was treated, he was very unfair. Invite him to your live stream. I mean, how would I do that? How do you even talk to this guy? Is he even out there on social media, you know? So I think it's unfair that he took all that blame and got that they came on him so hard. But sometimes that happens. Like They'll just pick a person and they have to make an example of them. Like the same thing happened to Kevin Mitnick. But you know what? It'll be okay because um maybe he's not trading right now. Maybe he does start trading when he picks it back up again in 2024. But although I would kind of suggest that what he was doing probably doesn't work very well anymore. And it's probably even worse now than it was back when, he got prosecuted and stuff, right? So he doesn't need to trade. Just go and consult with banks and stuff, right? Like he can make crazy money. And that's like Kevin Mitnick and all. And what was the Catch Me If You Can guy? Like that's the kind of level of I think they'll make a movie about him someday, maybe, right? So I think he'll probably be fine. Um, but then it goes back to like, okay, but is it fair that the robots just completely take over everything? And how can you argue that? Like, I, I, I want to say that it's not fair, but then there's no way that you're going to convince them to change it, right? But that's probably not the right question. Probably the right question is this a good thing for markets that the robots have completely taken over? And I say no. I say no. And I think that the exchanges and the regulators need to start thinking about what do we need to do to keep humans in this market, right? The market making robots. I really think that they need to say what do we need to do to keep retail investors in this market, because if the futures market becomes robots and institutions, which is basically what it is right now, right? There's maybe a few retail guys that maybe still have some influence, right? But if that's what it turns into, I don't think that that's good for markets in the end. I think that you're going to be prone to this same thing, right? This flash crashes and so forth, and like big mispricings in the markets, because the mechanism out there that is informed and knows what prices should be based on current information is not strong enough, right? And so because we're making markets less efficient in to some degree. And it's not just the introduction of the robots, it's also the rise and prominence of index funds and so forth too, right? Like if everybody okay, let's take it from this approach. When you go out there and you look at education out there, okay? And anybody that's smart that's talking about investing will tell you that the best thing that you can do is put your money in index funds. That's the conventional wisdom. And you know what? They're correct. If you want the best chance of maximizing your profits, the best thing to do is to probably just put your money in an S&P 500 index fund and just sit back and relax. These hedge funds, they haven't been doing very well past few years. Hedge funds haven't been getting all that much edge for you. Like the indexes are king, okay? But like if everybody is investing in indexes, then who is going to be the person to come in and say, well, this is wrong and this is wrong, and this should be priced like this and should, right? That's a necessary part of the market. So you can't get rid of that. So at some point, they're going to have to come back and say that we need to have a little bit of a change so that there's a check on the market, right? Everyone can do a hedge fund. I think they are overrated. They don't lose money on only the customer. Yeah, if they lose, well, it's kind of interesting, isn't it? Because when you really look at it, maybe a hedge fund might not necessarily be any smarter than you. They might just have more information, right? If they lose, the risk taker is the investor. Yeah, that's true. The person running the fund still makes money. Obviously, they don't make as much money as if they were just a good, fund that outperformed the markets. But Kathy Woods is down like what, 50% on the year, and she's still going to make money, right? She'll still be living in a mansion. Okay, well, a move back to 28.5 is doesn't surprise me because like so little traded there, but that was quite a big move back. You're kind of missing these prices up in here. Kind of looks like a really good bounce, like the a bounce, a false breakout, essentially. Well, I said it was a breakout. It was a breakout, but it was very short lived, right? Although there wasn't really anything to really like, it wasn't like other volume came in and pushed it the other way. It was just kind of like it rotated around there, and then they just let it come up without really holding too much volume on it. If you backtest every day and readjust your setup accordingly, yeah, I don't know. Like the thing that's funny about it is that again, like you might not realize where the edge is coming from. Like I could go through and I could do all of these crazy back tests every day and use all of these generational algorithms, and then in the end, the only reason that I'm making money is because of my fast connection. You know, like it comes back to um, if you have an edge, if you believe that a certain thing that happens in markets has a certain chance of predicting that that thing is going to happen, how do you prove that? And have they actually proven it? Do they actually have the data that they could write a peer review study if they were willing to reveal it to the public? Uh, you know, and you have to consider that there probably are some people out there that can't do that but are still making money, right? No, I don't know if that's accurate. Nasdaq, because something that's better. So, uh, let me put it this way: it's better if you come up with a model for the market, and then you go and you look back at the data and see that your model is consistent with what the market's behavior is, rather than investigate the market and find a pattern by observation and trying to take it from there, right? So, if you find something through observation, the chances are there's a much greater chance that it might just be random, that you're just being fooled by randomness. Not enough contracts for everyone to feed on. Yeah. Well, it's like a Pareto distribution, right? 20% is gonna make take all of the profits, and the other 80% are gonna lose. And the only option is to be in that 20%. How do you get in that 20%? Well, do you have to have a automated strategy that is co-located and gets at the front of the queue in order to be in that top 20%? Sometimes it sure feels like that's the case. Sometimes it sure feels like that's the case. I want passive index ETFs to become those 80% permanently that lose. I'm sure that at some point there will be a great index crashing sort of an event. There's going to be some sort of economic condition that comes along that's going to make being invested in an index fund a bad idea. You know, maybe we're already in it where you lose like 10 years worth of profits, but if you pick the right stocks, you're fine. I use voodoo. Yeah, because I mean, if you don't have the connection, I don't see what your choice is other than to be more informed than the rest of the market. And the issue with that is that as informed as you can be, you can never there's still going to be so much unknown information that I'm not too sure how consistent of an edge you can really have with doing that. I mean, that's been my experience with doing this, right? Is like when we catch it, we hit it out of the park, although I probably don't manage the trades as well as I need to, and I need to work on that. But then I go through these periods where, my results are random and I just kind of flop around because I don't really actually know what's going on in that situation, right? No, take finding the worst strategy and trading the opposite doesn't work because that strategy is probably just random, and if you trade the opposite of a random strategy, you're still going to lose. There's nothing in the DOM that is not based on patterns. Yes, there is. There's plenty of activity that is just random. Like again, most of what we see is just random. Like think about this for a second. That video that I put out on Monday. Hold on. So I put that video out on Wednesday. That is like the best empirical information that we publicly have about stylized behaviors of markets. Like that's the best that we have. Note that each one of those things are pretty specific and limited things, and how you turn that into a strategy as a retail trader. I mean, I've found a way, and I kind of described how I try and use it, but it's going to be up to you, and maybe you can't find edge from those things. I don't know. I don't know. You know what I mean? It's just what's up? Hey Stick, how you doing? Because a lot of the market action really is just random, right? And that's why the traditional way to make money before was market making, because we can prove empirically how market making makes money, but you have to be at the front of the queue. You have to be at the front of the queue for that to work. News flow dominated by European CPI higher than expected, says Alligator. Hmm. If it's random and you see strong bid trend, no, I mean, so if you're watching the DOM and you see a large bid show up somewhere, what price does after that, if you really do a long enough study of it, um, is kind of random. Like especially these things that are really obvious to you. So the CME is putting fake DOMs out there that no. Well, how do you explain trends then? Did you watch the video? If you watched the video, you should be able to tell me. Whoopi Goldberg suspended from The View for saying the Holocaust was not about race. That's the right thing to happen. No, not but I said big trend. What? Okay, but so what causes autocorrelation in markets in the video that we put out on Monday about stylized behaviors of markets? The market's the treasury's been pretty quiet here. We're like 3 minutes before the ES open. Think that there'll be a buy bid on the open. It's kind of tough on this in this case because I don't know. I don't know how you look at the overnight and everything and not want to buy it, but we are up pretty high too. Tomorrow is a big day in the euro. Why is that? Okay, so autocorrelation means a data series similarity to itself. So if you have a move that is just a straight diagonal line up, that is a data series that has 100% perfect autocorrelation. Yeah, Google split. The retail traders love the whole split thing too, right? Or at least as of late they have. So I'm sure you'll still continue to see money coming into Google. That's a strong up move there. And they put a big bid there too. Although I think that bid at 29.5 is maybe a little bit suspicious. Hmm. But they're hitting into 30 and running into some iceberging. I'm just bleeding. I'm on such a bad losing streak, guys. I don't know what to do. Of course, it's not that I haven't gotten some favorable excursions, but this week has been dismal. 1, 2, 3, 4, 5, 6, 7, 8. Almost 8 in a row. My indicators are not meant to identify meta orders. So kind of part of the thing that we're trying to tell you here with meta orders is that by the time you realize that there's a large meta order coming through, it's too late. Right? The market makers adjust to the volume as it's coming through. So by the time you've seen the move, it's the market makers already adjusted to it. And if you just try and jump in with and follow it, they're just going to come back. Just kind of like what happened with me there. You know, the meta order wasn't as big as I thought, and it just comes right back to where my position was, and I take a loss. I'm very discouraged this week. Um, no, I think that they're splitting. I don't know what the difference the different types of shares and all that nonsense. Okay. So what is it? So the question is autocorrelation is a proven stylized behavior of markets. So the question is why? Why does that happen? And how do we determine that sort of a thing? Well, what we can do is we can say, I think it's because of X, and then I can try and model X out in the market. And then I can see if the way that the market behaves is consistent with my model. Okay. So people say it's because herding behavior. Everybody's trying to follow this one, you know. They see other people buying, so I try buying too. And they make models up to do that sort of a thing, and they don't work. Right. So then they went and they started doing models saying, well, maybe it's because there's just one big guy that's just constantly buying, right? And then that matches up with what we see in the market, right? So why do we see trends? Or rather, why do we see autocorrelation and auto order flow? Because of the actions of large institutional players, right? So, where do my indicators play into this? My indicators help you see what the current market conditions are. Okay. So you can see where the average positions of the market makers are. You can see the spread so that you can kind of understand where the money is coming to and from, and like which part of the curve it's coming into, or what the dollar is doing if it's correlated with the dollar. And and you can see the printouts of significant changes in the order book, although it's going to be up to you to determine if that actually matters at that moment. Back to 128, huh? Even though the order flow in the 10-year has actually been down here. I don't know. So you guys asked me all these questions, I answered it, and now you're quiet. I don't know if that means that you just didn't like my answer or what. Or if you're just as discouraged as I am here by this market action. Is that a new? Oh, I don't. It's not quite there. Could do that though. Oops. Wrong button there. I mean, I don't know what to do. I don't know if it's like you should be going long here, or if like if we go long at 128, that it's just gonna repeat the same thing and it's gonna, you know, they'll touch the high of the day and come back down to here. Hmm. How Omicron might have affected numbers via Ian Shepherd. More than 5 million people officially were infected in week of payroll survey, but they only dropped off payrolls if they did zero paid work during the pay period covered by the survey week and received zero paid sickness leave. Yeah. I still kind of wonder if the administration isn't not trying to lowball us. Anyways, okay, so here's the next question. How do we identify large meta orders? Well, we can see it after the effect because we can see the effect that they have on price, but that doesn't really help you, right? So the only answer that you get after that is that you have to know that the meta order is going to come before it happens, right? Which means that you simply have to know things about how the market works and how certain institutions do things to predict what they're going to do, which is in line with the Keynesian idea of the market as a beauty contest. People people are trading based on what they think other people think about the stock market. Well, there's pushing the highs and they're moving that bid up. So this is kind of like the original trade that I was trying to make. I hear again, if I just try and follow it, I might just be late. Mm-hmm. It really frustrates me, guys. It just makes me like want to not do anything. It makes me want to quit and just make content. I find that these multiple large orders a bid below us a little suspicious still. Although when I saw that first one, I said that that was a little suspicious, and they did continue up, didn't they? Could be that this maybe our reading of the Treasury refunding announcement was incorrect, and it was a created that selling pressure, but now the more fundamentals of like the jobs report and everything are taking hold. I don't know. It's a little curious the amount of back and forth we've had. It's not common to have that big of a swing back and forth in the treasury. They like to just pick a direction and go with it, you know? Well, been seeing a significant degree of steepening through this whole move too. Like the volume through most of the move in the 10-year was flat. It's only been this last little bit as people are like getting squeezed out that they've started to buy it up. See, as soon as I'm like, I feel like I'm just off kilter on every little turn here because now I'm like, well, I probably don't want to get in here, and now it's like it's probably going to go all the way back to 1.8. Futures Trader 71 says, "Can you tell how thrilled I am to be trading right now?" See, not he did not like the setup for today. I suppose that we might have been able to see the 30-year turnaround there, and maybe that would have been a signal for us to buy. But I don't know, guys. I don't know. It's quite a jump to be to yesterday's highs, for instance. Like we're still within yesterday's range. It seems like an awfully large range though, isn't it? S&P 500 kind of turning over here. Hmm. Okay, so those really, really big orders aren't there anymore. Expect more chop. Well, what we're seeing in the S&P 500 could just be like a gap fill sort of a thing, right? Which would probably take us somewhere down to the 45, 30 to 40 area. Hmm. You do kind of have to wonder if the market's gonna try and reprice things with expecting the jobs numbers to be bad. Okay, there was some news at the top of the hour, right? Oh yeah, it was Bank of Canada Gravel speaks, so not really a significant thing for us typically. Hmm. All the volume profile people are going to be watching that thing in the 5 year there, being like, yeah, that's an unfinished auction. Yeah. Although that last little downtick was not too encouraging. Notice this bounce on the indices as low and declining volume. So the directionality of the order flow in the ES is really mixed right now when you look at that cumulative delta, right? Slightly up, but it's really quite all over the place. It does kind of look to me like that the treasuries may be forming a hole here. Hmm. That, and that trend up took the whole 45 minutes, huh? I think I'm losing track of time today too. But it's only been 20, not even 20 minutes since the S&P 500 opened. Strong uptick there. Curious. I didn't think that that one was, oh yeah, it was right there. It was, but it was actually a bid canceling at 02.5. That's interesting. Well, so the way that we incorporate volume in our trading plan and everything else that, like the indicators and so forth that we have in there, is that these are really more confirmation signals. So, um, I have never been able to find any evidence whatsoever that what current price or current volume is able to predict future price and future volume. But what we can do is we can say, um, the because the Omicron variant has harmed the employment situation in the US, and the jobs data that came out this morning was bad, and the jobs data that will come out on Friday is looking more and more likely to be bad. We should see interest rates come down a little bit here. And then I see volume in here that confirms my thesis, right? It's a confirmation that the orders that I was expecting to see come into the market are indeed coming. How do you grasp the concept of the context of the market? Well, so context is a catch-all word to describe that I don't particularly understand why certain things matter, but I know that this thing matters and this thing matters in this situation. In this, it's kind of a catch-all term. But what we really want to look at is we want to look at things that can predict future orders, right? Things that can predict future markets. And are there conditions out there that exist at this current moment that can be that can help you in predicting future orders? Yes, there is. One is just what the overall market conditions are, like how much are bids and offers holding and that sort of a thing, right? That's one thing that you can put down in context, that it does matter, because um that might not predict whether the next batch of orders is going to be a buy or a sell, but it can tell you if a meta order comes, what will it do? How will it play through, right? This market has been a little slippery, I think. Like this whole range, it was only like 10K contracts. In fact, we didn't get up here until and it was actually pretty much flat volume in market orders when we got up here. A lot of it has just been stacking on the bid and pulling on the offer, right? That's something. So if we get another leg of this buy meta order, yeah, I think that you'll probably see market orders push through things here, right? But there's other things like people's expectations of the employment numbers, for instance, right? Those are all things that we could put into context, but maybe we should stop trying to use the word context and we should start talking about what are the current liquidity conditions and what are some pieces of information that we know can help predict future orders, right? That's the questions that we should really be asking. And we are going to be talking a little bit more about that in the video that will come out 2 weeks from now. The Washington Department of Football was always the best name. Well, the S&P 500 did see some downside, but it wasn't crazy or anything. And the treasuries do appear to have some sort of a liquidity hole here. There was a big order kind of flashing at O2. I wonder if that order at O2 was somebody placing a refreshing order. What the hell is going on out there? Somebody jumping around. So one thing is that if you want to place a refreshing order somewhere, like there's kind of depends on your software and everything, but to place one that is just like a straight refreshing order is it's a little bit more work rather than to come in here, click on it, click edit, change it to a refreshing order. So that big order they got put down at O2 might still be there. We should just make note of that. The short term doesn't necessarily predict if we're going to move up or down from here, but it is a condition. It is going to take a little bit more volume to push down through that O2 half and O2 probably. You should keep uploading those informative videos. They're very helpful. I thank you. Well, once we get done with the next video, that's probably the best information that I have for you guys, right? We'll keep making videos, but the videos that we'll be making after that are probably going to be a lot more to do with current market happenings and things geared just probably gear, because people really like to hear me talk about gear, like monitors and computers and that sort of thing. So oh, that's interesting. So they had a little slip there in the ES. Where was it? Oh, I don't have the thing set to show me. But it was there at 45.52. That one's a little random. Like the market wasn't moving particularly strong here. Maybe there was some news there, but that slip there was awfully unusual. That slip is awfully unusual. Hmm. One thing that probably should also be factored into this market that I haven't considered until just this moment is that the drumbeat of war is starting to sound awfully shrill. And if there was an incursion by Russia into Ukraine, regardless of how involved the West actually gets in with it, they're basically declaring economic war on each other. Like they're gonna cut Russia off from SWIFT, like and with the oil and everything else like that. A war in Ukraine could have some very severe negative consequences for markets. Wouldn't that be incredibly funny and ironic if there was a war in Ukraine and because of that, the Federal Reserve ends up not raising interest rates? saved from raising interest rates because of a war. Like, what? Okay, so the treasury's touching those highs again. So they're back to 1.8. That's a pretty round number in the treasury. So we might want to watch and see what some of the flow up here does. Well, there's somebody's stacking at oh 04. That's curious that the robots don't think that they want to stack at oh 03 half. Hmm. Hmm. That doesn't happen very often in the treasury. So a place where um the there's less liquidity 2 ticks away than there is 1 tick away. Very unusual for the treasury. Is the audio stuttering for you? That's well, I'm gonna reset this my statistics here and we'll see. I could be dropping frames. Okay. Well, now, this is just so. Is there every step along the way here to the treasuries, even though we are getting a continuation of the move up, we are now getting it is flattening back out. So in the end, the spread has basically come back to even. But the 30-year has been leading the way, and the spread has evened itself back out. So I can't explain that. I don't know what's with that. Wow, that was somebody stopping out there, maybe, because that was some pretty aggressive order flow when they took oh 04 half and started immediately hitting into oh 05. This is turning into something much more dramatic, isn't it? And again, the 10-year came to 1.8, but you continue to see people stop out and pushing it. Interesting that they're trying to hold the wall on that. Yeah, I don't know. By the way, oil is like collapsing here. What's with that? Let's read this story from Zero Hedge about the Treasury. Just in time for the Fed's taper and upcoming quantitative tightening, which will reduce demand for U.S. paper for the foreseeable future, in its quarterly refunding statement, the Treasury cut the notional size of long-term debt as government spending slows now that Biden's Build Back Better plan is dead. Specifically, in its refunding statement, the U.S. Treasury announced funding debt sales next week, totaling 110 billion, down from 120 billion. Okay, so this again, this is the thing that really confuses me. They're going to be putting less treasuries out into the market. Why did we initially sell? What caused the sell? Because I I just thought I was wrong and I didn't understand that statement and that's why they were selling. But now I'm thinking, no, like we had it right the first time and I can't explain why there was the sell. Okay. Blah 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 blah. According to Bloomberg, the 110 compares with a peak of 126 billion reached a year ago. Auction size across the curve began rising in 2018 to finance tax cuts and surged in 2020 to finance the federal pandemic response. So if they're going to be putting less treasuries out there, then that means there's less offers, and then it's easier to move up. So why In keeping with its current issuance reduction over the next 3 months, Treasury anticipates incrementally reducing sizes of the 2, 3, and 5-year note auctions by $2 billion per month in line with expectations. As a result, the size of 2, 3, and 5-year auctions will each decrease by $6 billion by the end of April. Treasury also anticipates reducing the size of the 7-year note auction by $3 billion per month over the next 3 months. Man, this is a long story with a lot of just numbers in here that you probably don't care about. Given Treasury's desire to stabilize the share of TIPS as a percent of total market debt outstanding, Treasury will continue to monitor TIPS market conditions and consider whether subsequent modest increases would be appropriate. While these changes will make substantial progress towards aligning auction sizes with intermediate term borrowing needs, additional reductions may be necessary depending on developments in projected borrowing needs going forward, the Treasury said in a statement. Also, they could reduce it even more. Man, this is a really, really, really long article. I'm not going to read all of that. Medium day for you, NASDAQ killer? Well, I think I clawed back some of my losses, but would kind of like to see it further. So they did push a little bit below 1.8, but look, they did come back to it. So that's a little bit more kind of like what I should expect, right? It's like they get to 1.8, kind of pause there and distribute a little bit, and then we see if there's another leg. I suspect, though, given the timing of things and the way that we moved and everything, that there could be another leg, though. And I have to wonder, like, okay, there's less treasury issuance coming out, the jobs numbers are bad, and then there's Ukraine. So there's like those are three things there that are all kind of, you know, um bearish risk overall, and could mean lower interest rates, you know. What was there's the thing that would be hawkish? I don't know why we sold there. Market maker maybe was just screwing with us. I don't know. This is a weird move in the treasury. I suppose it could just be some big guy had decided to sell there. I don't know. There's Salim's picture. What did you get? Oh, that's not bad. 2,000. Let's see here. Pentagon confirms U.S. President Biden decision to deploy troops to Eastern Europe. So that is. Hmm. Okay, so the spreads have all evened out now. Imagine total Russian isolation from world because of sanctions. Exactly. Well, the good news is that not too much critical goods are produced in Russia, like manufactured in Russia. But there's two places where it could cause some issues. Number one, of course, energy, right? So that's the real concern: is where is Europe going to get its oil and gas from? That's a that's a massive, massive problem that the administration is apparently already trying to get ahead of. But I think the other concern is China, because if China allies itself with Russia through all of this, and China starts to do stuff too, then that could cause disruptions. So reset our DOMs here. And I will even clear my columns. Hmm. That last one kind of looked like a solid uptick, but then the 5 year actually ticked down. So there's the violent NQ uptick. Did they? Well, the S&P 500 has been recovering there quite nicely, hasn't it? What? South Korean professor Cho Jae-won invented a toilet that turns poop into energy and pays people digital currency. What? That's going in today's market recap for sure. So weird. It is so weird. Okay. 5 years still kind of dragging on him. And oil's still kind of a little bit of a dead cat bounce there in oil. Oh, we have a White House press conference? The top commodities exchange, the CME, wants to be the home of battery metals trading. That would be awesome. Oh my gosh, I would maybe even trade those. You get paid in poop coin. This is just so ridiculous. It did not stay at 1.8 as long as I thought it would. Yeah, look at this. See, my problem here is that I'm not really predicting anything right now. I've been like behind. I've been behind on every move and late. Well, they recovered back up there, back up to '03 pretty quickly, so I suppose that's good. Thanks for streaming. I appreciate it. I needed that big toasty because I'm feeling awfully discouraged this week. Maybe I'm just looking for, I'm swinging for the fences and I shouldn't be, but really frustrated. Hmm. The micro 10 is moving around a lot there for some reason. And the market makers on both sides seem to be more interested in it. Well, okay, the bid just dropped there, but that's a little curious. Why is that? They're moving around quite a bit just over what they do at '03. But the 5-year and the 30 both tick down to there. Actually, the 5.3. So the 10-year is experiencing some convexivity. IMS Chief Georgieva is speaking right now, by the way. Strong sell to start could be due to the higher European CPI. That might be. That's actually not a bad theory. There was a bull in ZB. I don't have my little ticker thing on it there, so I can't see. I mean, it's like 6 to 800 at every price, so 600 pulling wouldn't necessarily be that big of a deal. Looks like my position to bail was correct, but I don't know. Probably when I'm getting like this, probably the thing that I need to do is just start taking smaller winners, right? That's usually how we get back on track. Down tick again. Well, in ES, you mean? ES is all over the place today. I would probably be even more frustrated if I was trading in ES right now, huh? So how did I get I'm a little confused. How did I get an average price at 1.81 and now we're back to 802? I am so confused there. I got screwed somehow. I watched them go and make new highs without me. It's a really tricky flow today. That's for sure. Similar to that. Well, there's something going on here because there was quite a bit of selling there in the treasury, right? And it doesn't look like they're done either. Particularly the 5 year is really. And there's another downtick. It's kind of like the flow is a little aggressive too. Well, what I don't understand is why was it last time that they were selling it was all the way up here? How did that happen? There was like some sort of disjoint between the between the micros and the regulars. $45.50 took some 100 plus block cells. Well, I don't know if that's just because 45.50 is such a round number, that doesn't necessarily surprise me. You know, I think that's when you're seeing big orders, that's always got to be the first question. Is it a round number? See, they gypped me out of like $12 here, and I don't know. I'm still confused how that happened to me. It's like that, and you look, you see the 5 year and the 30 year are up, but the micro 10 is not. So like there's some convexivity going on at just at the 7 year end of the curve or something that's screwing me over. Hmm. Well, I shouldn't say it's screwing me over. I mean, I'm not in a position right now, but what the heck? Could be the IMF cheap speaking, though. That might be a factor behind current action. You're sitting on your hands. Well, look, there was a good uptick right there. Could be what we're seeing is just a flattener coming through. If that's truly the case, it's probably a better idea to take the trade over in the 30, but what's going on with yeah, PayPal earnings were a disaster, man. 18 for you, AT&T was did you see the other day that they sold their holdings in Time Warner? You remember that whole remember talking about that and being like, I'm be surprised that they allow this to allow the data provider to own the one of the biggest news channels too and all that. Remember that stuff? Hmm. Hmm. Yep. And they just gave it up. But maybe it's a good thing for AT&T, right? I mean, they have a lot of debt. Getting rid of that one because it hasn't been doing too well for them. Maybe it's a good thing. I don't know. Warren Buffett still seems to like it. I don't know. Maybe it's a value trap. That sure looks like they're gonna bust those highs. S&P 500 is faltering again. It'd be interesting to see. You're right, totally right. How far AMD and Google fade down to now? Yeah, because those moves are like, I mean, Google earnings was amazing. Don't get me wrong, but like a 10% move in Google is like crazy, right? Hmm. Still getting selling in the 5-year end of the curve. User reports indicate Delta Airlines is having problems since 10:24 Eastern Time. Good little bounce off the lows there in ES, but maybe getting a little battle here at 04. I'm kind of noticing that the market makers are just kind of all over the place here, especially in the micros right now, as they just kind of distribute across 03 half and 04 in the 10-year. We do get some oil numbers here, right? Crude report. It's a draw. Negative 1.04 versus expected 1.8. Curious. You see that time now all three of these are upticked, but the micro treasury is staying where it was. I guess the bid is not so well, but look, there's some absorption right there. You lost too many in a row. I've lost too many in a row, man. Interesting. The micro, in the end, the micro ended up being right. Well, so far on oil, they're heading back up. ARK is at yesterday's ARK down 4.3%. I wonder what the average daily volatility for that thing is, though. I haven't been trading CL since my blow up, but I have been keeping a very close eye on it because I might want to buy an oil stock. I think in this environment, you kind of have to be watching where oil goes, right? Because that's probably your best hedge in this environment right now. Of course, that could very quickly change if we, like say Ukraine war doesn't happen, but we get stagflation. I don't know, or something that there is a risk that something comes in and just absolutely slams the oil demand, right? Or causes oil demand to collapse, rather. So I think the treasuries are still waiting because the IMF chief is speaking. It seems slightly tilted to the upside still, but the micros are not ticking below that 1.8. Who buys gold on the oil number? That's a good question. No, I think something else is going on in oil, and that might just be coincidental capped in price. Because, well, for one thing, it does look like generally overall interest rates are declining a little bit today. But then there was some reports that there was activity in gold that suggested the sovereign nation was buying up gold below 1800. So that's what I think that's about. Okay, so now I am seeing some orders hit into 1.799. Probably because the 30-year finally ticked up. Is this holding a better bid? Yeah, there you go. Okay. The ES gonna... eh. Okay, so there's a big order there at 45.40. How long is that? That's been there maybe for a little while. No, wait. 45.40. Do not see it. Well, they smashed through it, though. They just traded right through it. Do you see that? That was a collision. That was a collision. Wow. Yeah, the short term trade though on that one, you take your profits, I think, because that's just like a little stop run. Did you see when oil was gone? Yes, I remember that day. We could go and find the live stream if we wanted to. Pretty sure that I was sitting there going, if only they had micro oil contracts. You know what I've learned about those kinds of moves though is that like it's best to just like let it play out through the day and then try and buy it the dip at like the end of the day. Because all the people that were just trying to catch the falling knife just got slaughtered. Well, I don't know, guys. It's kind of starting to look like, well, eh, eh. It's kind of starting to look like the Treasury is very happy at 1.8. I still see a slight bias on the upside here in the order flow. It has kind of been both ways though. Like there's been competing waves both ways here. There are micro oil contracts now, but when that happened, they weren't available. That's why it was funny. That's why I was laughing about that comment. I don't know, man. So when ES broke those lows, it was looking pretty dire, but look at how easily they bounced there. I don't know. So do you see here in the micros? It was remember earlier. It was like there was a spread and they were moving around a lot, and it was like, what's going on here? And now there's more liquidity on the inside. There's some people taking some trades there. Ah, that's interesting. Now you can see there was some takes there and a couple of people pushing really aggressively in the micro, but then it ticked back up and it's just back to what it was. Man in Ottawa melts down over the honking from the Freedom Convoy in Ottawa. I haven't slept in 5 days. Oh, I bet that would make you mad. Wowzer. You know when people short under the low and they take the opposite trade and you get the squeezes? It could be that. It's the index, so it's like what who's to say that it's not just random? Kayleigh McKinney turned over text messages to the January 6th panel, says report. Hmm. Citing vaccines, McConnell on COVID. It's time for the state of emergency to wind down, says tweets being tweeted by Burgess Everett and retweeted by Carl Quintilla. And you can see the micros trying to take another tick up, but we're still basically where we were. Maybe the 5 and the 30 down a tick, so. And ES still looking like a good recovery. But I don't know. I mean, they could flip back down again. The larger trend in the ES is still kind of tilted down. Well, the last buy impulse of orders that we saw in the 10-year was not as strong, and now we are down a tick. So that's a more solid hold. I think ES is going to the all-time highs if not something special happens. Maybe. I am kind of partial to ES moving back up to all-time highs, but I think that it will be a kind of a difficult road. I'm not so sure that that's going to be like just right back there tomorrow. You know what I mean? When you come back and look at a daily chart, like we're still in like, that could just be a bull trap, you know? But the thing that's making me think maybe that's not the case is just because some of those earnings really truly were phenomenal, right? Darn. Well, guys, I am just a dismal failure. So sick of this. So here again, this is where I'm confused at why like I was at one spot 1810 because I could have gotten good money on that one trade. How did it get to there? That wasn't happening. I don't know. I'm just like I think I'm just flopping around. Clearly, the way that I've been performing lately is so dismal. Um, that's like 4 or 5 bad trades in a row every day. I don't feel like I'm doing anything different. Don't feel like I'm doing anything different. There has been some good moves. Like I should be making money. Mm-mm. But I'm thinking that I just don't know enough about what's going on in this market to trade this. It's just randomness, and I'm trying to take such tight, small trades, and it's just not going to work. And here today, it's been like bad both ways, right? Happens trading is hard. I am, but I'm kind of getting over it, you know? This is probably just noise for all we know. Let's move down. Maybe we go all the way back to the lows, though. Maybe. Kind of my issue is that it's like when I feel like I know every little possible thing that I might ever possibly have the ability to know about how this moves and everything, and then you're still doing that terrible, then why are you doing it? This has just been dismal action though. You think that they'll fall all the way back? Right now, they're just kind of coming back to like the market maker levels, but they haven't really been bouncing off those lately. They've been zigzagging across them. So the thing that also is that we've identified today a couple of things that probably could be good reasons to move rates one direction or another, but they don't seem to be having follow through, right? Like we are basically still within yesterday's range. And I guess since there's not significant news and we got the jobs numbers on Friday and everything, but for me, I am down $100 on the week. Like I'm probably time for me to quit for the week. Mm, I don't know, guys. I don't think I've ever wanted to just not do it anymore than right now. Scalp. We should be trying to take teeny tiny ones, huh? All right, all right. You're probably right. Maybe your approach is long term. Yes and no. I mean, like I really what I should be doing is I should be when I really got a good, you know, edge there and I really know it. And today is not one of those times where I think I know something that really should move the market right. It's just I think that it should have a larger effect than it's having, but I'm not seeing something that I think is going to be instrumental in like the next month of action or something. Maybe we see that Friday, right? Maybe Friday comes out and the jobs number is really good, and then interest rates are just going to start rising back to 2%, right? So I don't know. What makes us think that I'm gonna be able to find a consistent edge in this? Somebody has to do it. Somebody has to do it, but you know, I feel like that, uh, if I was making $10,000 a month from the YouTube stream or something like that, it's just, man. There have been some situations today. So if I come back here and I look at just today's trades, um, well, three of them I never got any favorable excursion. See, this is where I really truly get frustrated. Okay, so look at this: sell, buy, sell, buy, sell, sell. Right, and on these first three, I never even got one tick of favorable excursion. So how is it? You take three trades in a row, you don't even get a single tick of favorable excursion. And it's not because I was just fighting against the trend. Every single spot that I picked was the absolute worst place to take that particular trade. Then I got these other ones. They did go a little bit further, but it's actually kind of random. And what's happening is I'm waiting for it to break out instead of just taking the range and not getting out. So that one is maybe not my thing. Some people aren't cut out for this. And I don't think that anybody is cut out for this. Right? Doesn't look that bad. Well, it's only $50, but the financial juice guy didn't turn his microphone off and I can hear him eating chips. Anyways, the point is, if I'm going to lose $50 a day, we can't do this for very long, right? Can't last for very long if it's $50 a day. And that's what I've been doing. It should be more random than that. So like there's two problems here. Is that number one, they can't possibly be random. It's really weird too because remember like back earlier, well, last year, I guess it's still only just February, right? But remember how from like August to November it was like we couldn't lose? You remember that? What's with that? And now all of a sudden every single time. Wow. Frustrating. It's so frustrating. So what am I supposed to do? Other than to say like, yeah, I don't know if retail traders can really make money trading futures anymore. I don't. Whatever the edge is out there that you can find, it's not something that I can do. Yeah, other than take on excessive risk. Well, Nasdaq Killer said just take small scalps. Maybe that's what we should be doing because like there are kind of some opportunities with the micros and how it does that. Hmm. Blizzard Rockstar veterans raised 5 million for new studio Lost Lake. That's cool. Review your trades and look for more confirmation. Well, I think that if I was going to go through and redo all of this, that my the call would be to not take a trade, right? Because the issue is again, I don't know. Like you can review your trades and you can say, well, I could have taken this. And could obviously there was a lot of money to be had here in the treasury today if you made all the right moves. But how would we know what those are? As far as we know, where it turned and how this all played out and everything is random, right? Captain Price says, I don't think small scalps are worth it either. I've been struggling on exits. Mm. Like what the evidence tells me is that unless you really know something that's really going to move the market, that you shouldn't trade. And what I've been doing is I've been bringing that threshold lower and lower and lower because I want to take trades. But if that's really the situation, then it doesn't make sense to trade most days. And some of the times when it does make sense to trade, you still can't do it because like there's too much volatility, right? Like the non-farms might be a good opportunity, but I'm not sure that I'm going to trade that at all. Hmm. Trade greens. Or maybe I should just I don't know. I'm not enjoying this, guys. I enjoy making stuff about the news. I'm good at that, actually. Seems to me that I'm good at that and that I have a really good idea of what's going on compared to other people. And people think it's funny. Although my last TikTok did terrible, I must say. But then the other thing is I'm like streaming it, so it's like with the small tolerances that I'm doing. Well, today's order flow, like I'm seeing enough order flow that it can't be just the market, people trying to trade against me, but it's not. No. You know what? See, Ram, with the position that I have here with so many people to talk to and always sharing me information and everything, I've never gone and bought some guru course or been in some room, but I've been given so much information from people that have. I have to tell you, you're not going to get anything from that. And here's the issue. Okay, to come back to it, there is no evidence to support that Fibonacci lines, support and resistance, trend lines, moving averages, any of that nonsense has any effectiveness at predicting the future price. Absolutely zero evidence that that's the case. Everybody's like it's possible, but everybody's looking for it and we can't find any evidence that you can do it. And what we know about the market says that when you take a trade, it has an impact on the market. And that's why price moves where it does, is because of the orders. And because of that, what you're going to see is going to become random, right? Like if there's an edge, if you know that the price is going to be here, then you're going to buy it and move it up there. And then if everybody knows that that's a signal, then they're all going to buy it. They're all going to start buying it earlier until like the signal doesn't even exist, or you create one the other way. And if you're not in it soon enough, you can lose money. So that's why almost every kind of statistical analysis that you can make when you're looking at the market, it comes out to be a random walk. How do market makers make money? They're at the front of the queue and they take on risk and they use correlated instruments. They're very fast. That's how they do it. Seriously. They don't know which direction it's going. They actively avoid trying to have to know which direction it's going to go. Persistence without insight will lead to the same outcome, right? And that's where we're kind of where I'm coming to now is like, okay, one thing that we do know is that the actions of extremely large institutions can move the markets, and you can sometimes predict those. But there's so much noise, and being able to predict those, that's incredibly hard for a retail trader to do. So every piece of information that we have kind of brings us to that you're probably not going to make money from trading, and that where else are you going to look to find something that gives you the edge that you need? Because we've got taken some pretty advanced information to get to this point, and then at the end of it, it's still like, well, yeah, I mean, I think we should still stream, but maybe I need to change. I need to change something, man. I'm getting bored and frustrated. I'm really frustrated that I put out so much good content and it doesn't really take off on TikTok or YouTube. I mean, we have 7,000 subscribers. It's great, but compared to the amount of work that I put in to do it, and I'm coming in and I'm putting in, a good 10 hours, well, really more like 15 hours a week just on the streaming for you guys. And then I'm putting another 10 hours or so in making content. But I'm not really rewarded for it. And I could do so many other things with that time. I don't know what I would do with that time. I'd probably be really bored, but the futures thing, I like, look, we can keep trading this so we can just burn this account out. Or we can probably keep going for another 6 months with like this, but it's just like super, super retarded. I probably feel fine tomorrow and just forget about this whole conversation and everything. But right now, I am just insanely frustrated. All right, guys, I'm done ranting. See you tomorrow. Stay